Right, listen up, you lot. Forget chasing the latest fad in the market. That's for sheep. Contrarian investing is about going against the herd. It's about zigging when everyone else zags. See, most investors follow the crowd, buying high and selling low. A recipe for disaster, I tell you. Contrarian investors are a different breed. We sniff out opportunities where others see only danger. When everyone panics and sells, we see bargains. We buy low, wait patiently, and then sell high when the herd comes crawling back. It's not for the faint of heart, but it can be bloody profitable. This isn't just about being different for the sake of it. It's about understanding that markets are irrational. They're driven by fear and greed. Contrarian investing exploits these emotions, turning them into your advantage. Now, let's talk about value investing. This is where contrarianism really comes into its own. Value investing is about finding companies that are undervalued by the market. Think of it like finding a classic car that's been neglected in a barn. It might be covered in dust, but underneath lies a thing of beauty. Contrarian investors use this same principle in the stock market. We look for companies with strong fundamentals that are being ignored or misunderstood by the market. These companies might be temporarily out of favor, but they have the potential to deliver solid returns over the long haul. Positive changes in the industry can lift all boats. It's about spotting the potential before everyone else does. Being ahead of the curve can lead to significant rewards. Section 4, Sector Spotlight 2025, where contrarians are looking. Now let's talk about where the opportunities lie in 2025. The future is always uncertain, but with uncertainty comes opportunity. The market is constantly changing, so we need to be adaptable. Flexibility and foresight are key to navigating the ever-evolving financial landscape. But here are a few sectors that are looking particularly interesting from a contrarian perspective. First up, energy. This sector is often overlooked, but it holds significant potential. Yes, I know what you're thinking. The energy sector, really? It seems counterintuitive, but that's where the opportunity lies. Fossil fuels are so last century, but hear me out. While the world is moving towards renewable energy, the transition is gradual. The transition to renewable energy is going to take time. Infrastructure needs to be built and technology needs to advance. And in the meantime, we still need oil and gas. These resources are still critical to our current energy needs. Demand is high and supply is constrained. This imbalance creates a unique investment opportunity. That's a recipe for higher prices. Investors who recognize this can position themselves to benefit. Another sector to watch is financials. This sector has been under pressure, but change is on the horizon. Banks and insurance companies have been out of favor for a while now. They've faced numerous challenges, but they're adapting. Low interest rates and increased regulation have weighed on their profits. However, these conditions are starting to shift. But with interest rates on the rise, the outlook for financials is starting to brighten. Higher rates can lead to improved margins for banks. Finally, don't overlook international markets. These markets often provide opportunities that are not available domestically. Emerging markets, in particular, offer some compelling opportunities. These regions are experiencing rapid growth and development. These economies are growing rapidly, and their stock markets are often undervalued relative to their growth potential. Savvy investors can find great value here. Section 5. The upside rewards of contrarian courage. So, what's in it for you? Why bother being a contrarian investor? Well, for starters, there's the potential for market-beating returns. By buying low and selling high, we can outperform the market over the long term. But it's not just about the money. Contrarian investing also teaches you to think differently. It requires you to question conventional wisdom and to do your own research. This can be incredibly valuable in all aspects of life, not just investing. And let's not forget the psychological benefits. Contrarian investing requires patience, discipline, and a strong stomach. You need to be able to withstand the ups and downs of the market without panicking. This kind of mental fortitude is invaluable, especially in today's volatile world. Section 6. Navigating the risks, contrarian pitfalls. Now, before you rush out and start buying everything in sight, let's talk about the risks. Contrarian investing can be alluring, but it's not a guaranteed path to success. Contrarian investing isn't without its dangers. It requires a deep understanding of the market and a strong conviction in your analysis. In fact, it can be downright risky if you don't know what you're doing. The market can be unpredictable, and going against the grain means you're often swimming upstream. The biggest risk is being wrong. If your analysis is off, you could end up with significant losses. Just because everyone else is doing something doesn't mean it's wrong. Sometimes the crowd is right and going against it can be costly. And just because something is unpopular doesn't mean it's a bargain. Unpopular stocks can be undervalued for a reason, and it's crucial to understand why. You need to do your due diligence and make sure your investment thesis is sound. Another risk is timing. Timing the market is notoriously difficult. Even if you're right about a particular company or sector, you could still lose money if your timing is off. The market doesn't always move in predictable ways. The market can stay irrational longer than you can stay solvent. This famous saying highlights the importance of patience and resilience. That's why it's crucial to have a sound risk management strategy. Protecting your capital should always be a priority. Don't put all your eggs in one basket. Diversification is key to managing risk. Diversify your portfolio across different sectors and asset classes. This way, you can mitigate the impact of any single investment going wrong and be prepared to hold your investments for the long term. Patience and a well-thought-out strategy can help you navigate the choppy waters of contrarian investing. Section 7. Conclusion: Contrarianism in 2025 and beyond. So, there you have it. Contrarian investing is a powerful strategy for those who are willing to do the work and embrace the risks. It's not for everyone, but it can be incredibly rewarding for those who are brave enough to go against the grain. In 2025, with markets more unpredictable than ever, contrarian investing is more relevant than ever. With careful research, a disciplined approach, and a healthy dose of skepticism, you can navigate the market turbulence and potentially come out ahead. Remember, fortune favors the bold. But remember, it's your money. So don't blame me if it all goes pear-shaped.